Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of October 13th through 17th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance and navigation in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. Take a look down below at the description box to start learning and earning through trading with us. With that, let's get into the markets. Okay, so obviously last week we had a crazy close on Friday, and we basically wiped out most of September's gains and obviously the early innings of October. But due to the tweets that we've seen, well, not tweets, but the posts that we saw from President Trump, we are most likely going to end up opening with the gap up tomorrow morning. Now, I was already initially thinking that we can see a retest from a dead cat bounce around 660, and that's exactly where we are at right now due to the fact that we are seeing the overnight futures action having us up over 1% from last Friday's close. Now, where should we go from here, right? Because again, a dead cat bounce just simply means that we have a very low volume back bounce relative to the initial big red day selling volume bar here. And with that dead cat bounce usually comes retests. And so for me, when I'm looking for retests during an initial breakdown of an underlying uptrend, I want to see a retest of the most immediate and close in proximity SMA. And so on this daily time frame here, my eyes are all on the daily 21 SMA. Okay, this light blue line here that I'm tracing with my mouse. And so there's a lot of people who are already thinking that we're going to get an immediate snapback rally, a V-shaped recovery to the upside. But again, technicals still matter even if we have this volatile president that is sending out these posts that are creating volatility, right? And so that's the thing, right? Volatility breeds uncertainty. And this is why we get these very wide price ranges where we get day-to-day gap ups and gap downs. And during those trading days, we get these wide price ranges. And so already overnight, we already have a very wide price range where we're most likely going to have that gap up. And depending on how we act tomorrow, we may just even move lower as well. Who knows? That is why we have this expansion in volatility causing this type of uncertainty. Now, with this dead cat bounce though, okay, I would love to see a retest at 660 and we just kind of stop here, right? Because if we decide to stop here, then on the next day, maybe on Tuesday, depending how we close tomorrow, we can have another small update where we can retest the curling down daily 21 SMA. Right, so that's another thing, right? I don't know how we can immediately have a snapback rally to the upside because again, both of my short-term SMAs, the daily 10, this red line here, and the daily 21 SMAs, this light blue line here, are both curling down. We're gonna need at least a couple of days or maybe this entire week for my SMAs to flatline again and then eventually turn up higher, but they will only start to curl up higher once the price is over both of my daily 21 and my daily 10 SMAs. And I don't think we can get there. Frankly speaking, we can get there that quickly. Okay, and again, I could be completely wrong because we have a very volatile president who sends out these posts that create volatility for the markets. So again, I just really want you guys to focus on the price action. Try to filter out all the noise, what people are saying, and just focus on the fact that we still had a very, very large sell-off day. This is an actual printed candlestick with a very, very large volume bar. And as a matter of fact, this is one of the largest, I think it is the largest, yeah, it is the largest volume day since the sellout that we saw back in April. So right here on April 4th here, yeah. So again, on a Friday as well, and I believe I put this statistic as well in the actual market summary. So please make sure you guys read the report before you watch this technical analysis video. So, this is the largest selling volume bar since April 4th. And again, yes, we could possibly see a nice V-shaped recovery, but then again, with an introduction of volatility and this expansion in market vol still leaves us with that potential risk of potentially continuously moving to the downside. And again, I don't care if we decide to move sideways for this entire week and basically consolidate this massive move that we saw last Friday that again wiped out most of September's gains and obviously all of October's gains so far. So if we do decide to move sideways, if we start to tighten up, which would be great, that will be amazing. Now, depending on how we close tomorrow, okay, I want to take a look at the VIX futures as well, because VIX futures has been telling us a very interesting story, and that's the reason why we decided to hedge with VIX calls in late September and with SPY puts in early October, on October 3rd. Okay, and there's a reason why we did this. Well, because on VIX futures, with the markets making all-time highs consistently, VIX futures stopped making lower lows. Okay, and it started to base out here around this 18 value from 17.50 to around 18. Okay, and Friday was the day that eventually caused this basing out action to eventually break to the upside. And no matter what Trump says, okay, this is still a very risky event to play into, right? Because the VIX future specifically is still elevated, right? And there's still a good chance that we can still see some very nice updates on VIX futures, which will drive or at least allow the VIX itself to stay over the correctional value of 20 here. Okay, now just based on what we saw on VIX futures, we're most likely going to be expecting VIX to open up slightly under 19 here, maybe around right at this 200 SMA on the daily time frame for the VIX. And if we decide to stay above this 200 SMA on the daily time frame, then most likely, just like what I said a couple seconds ago, we could potentially just make smaller candlesticks here on the VIX right around this 20 value or around, or at least above this 20 value. Okay, and there's still a lot of uncertainty surrounding Trump's thoughts and his plans for China. And I know he did say that he wanted to keep that plan in mind of having 100% tariffs on China on November 1st. So that is still a lingering uncertainty, even if we do know about, quote unquote, Taco Trump, where he eventually folds. But then again, this overall uncertainty is what's driving VIX futures to be still elevated instead of completely wiping out the quote-unquote gains from the expansion that we saw on Friday, right? So again, we had to be very, very careful here. Follow the price action and please make sure to stay hedged. This is a major reason why we decided to get those VIX calls in late September and SPY puts in early October. So please stay hedged. As a reminder, hedges are supposed to help you and help your portfolio from being overtly volatile, right? It helps you avoid your portfolio from swinging to the upside and to the downside violently. And thankfully, if you kept those hedges, which I really, really hope you guys have held those on Friday. Personally, they allow my account to stay green. I actually ended up green on Friday, and green for the week as well. I ended up at 7.70% with a high of about a little over 9%. So again, it wasn't that far off from the highs that I made last week. And again, this is what hedges do for you. All right, you avoid these violent and nasty swings that usually tear people apart and emotionally strip them from the usual logical state that they go with for the mental state before they trade. And so again, hedges are very, very important to keep you sane, actually sane and stable, so you're able to make wise and logical decisions when it comes to executing certain trades during market vol expansions. Okay? All right, so with that in mind, make sure you guys watch that SPY 660 level, okay? And if you guys want a nice range, 660 to 663 is probably a good area to look out for a potential rejection, because maybe around 663 we can see a retest, a coinciding retest of the daily 21 SMA, which is currently residing in $664.25. So as it continues to catch up with the price, we should be seeing the daily 21 SMA sitting around 663, and we can potentially, if we decide to move up higher into Tuesday possibly, depending on how we close tomorrow, we can see a nice coinciding retest and a rejection at this daily 21 SMA area. Okay? All right, so with all of that in mind, let's take a look at our first and final official swing trade idea for this week, and that is PSTG, or Pure Storage. So that's right, we are revisiting this one because we actually had this ticker in our watch list since late 2021, and we eventually began to do our actual analysis, our fundamental analysis on this company in 2022. And you guys already know I was really liking what I was seeing with this company and the future growth with it. And I think Pure Storage was around like high 20s when I was looking at it in late 2022, and in late 2021 I think it was like around the same price, I think. Yeah, somewhere around there. I'm not gonna go all the way back. There's no need to. You guys can take a look at that by yourselves. Okay, but now obviously around 3 years later, okay, PSTG is now sitting at highs of 80s. It reached a new all-time high price print last Friday at $94.72. And I really think that this one has a high probable chance of hitting that amazing triple-digit share price number that every company aspires to do. Every real company with real revenue and real free cash flow, right? And you know, PSTG is definitely becoming a huge winner when it comes to the infrastructure that is needed for these rapidly growing and in-demand AI hyperscalers. And again, Pure Storage, the name says it all. It's involved in the data storage, and especially becoming a very, very important part of AI data storage, and is a very demanding part of the AI infrastructure. And Pure Storage has come out swinging against other data storage solution companies, and they're really trying to gain market share for the AI hyperscalers when it comes to data storage. And I've written all about it again in the report for this week. So please read the overall top-down fundamental and technical analysis that I've done on Pure Storage. Again, it's a complete 3-page section in the report. Okay. Now, as far as technicals go, okay, ideally, when we take a look at the weekly time frame, obviously due to the market action last week, we ended up with a very, very bearish looking, well, specifically a reversal candlestick on the weekly time frame. And so if you were to continue this, okay, to the downside, since we have a longer top side or upper wick here, I would love the price to come back down and start to move sideways within the parameters set up by this 80.80 support level, and then this $89 resistance level. Okay, so if you decide to move sideways here, I would love to see it happen. All right. However, Okay, I also can realize that there is a possibility, okay, that we could be seeing the price maybe just this entire week tightening up in between the ranges that were formed last week. So in between the high of 94.72 and a low of 85.97. Why? Well, because pure storage is just that strong. The momentum is there. The relative strength is there, right? And if it wants to move sideways, it might just simply try to stick under very close in proximity to the current all-time high area, this territory of all-time highs, and just continue to move sideways in between the range that was formed last week. I also wouldn't mind that, right? If we do decide to end up forming an inside weekly candlestick by the end of this week, that won't be bad, okay? But again, ideally, I would love to see the price coming back down to this near 9-point range here and just move sideways before we decide to make another leg up higher, second leg up higher. And again, the first leg up higher was from this earnings day reaction. And you guys should know we were long this already. And boy, was it a great reaction, a great morning to wake up to. Okay. And I still have a little bit of equity left as well, even though I've already sold my option play, obviously. Why wouldn't I? But again, if you guys are not in this one yet, there's also a good chance that we can see a potential dip in pure storage in the long-term future. And if you do, then $70 is most likely going to be a great entry point to go long for the longer term if you do decide to come back down all the way down here to $70. Okay, but again, you have the entry points that I've given you guys, you have your stop losses and the profit targets that you guys have in the report. Again, I gave you guys a full breakdown of a 3-point game plan as to what you guys should be doing with this specific swing trade idea for this week, along with a breakdown of the specific option contracts that I want to take a look at for this ticker. So please read the report first before you watch this technical analysis video. Okay, and last but not least, I just want to go over one specific ticker from this week's list. There are 3 tickers in the list, but I just want to go over one single ticker because I think this one has a lot of potential to the downside, and that is CARVANA. I know a lot of people, maybe you're watching this one right now, and you might be thinking that, hey, you know, I really love CARVANA. I don't want this to go down, but hear me out. Okay, so obviously I do know CARVANA has been one of the best performers in the last like 2.5 years, maybe 3 years at this point. Okay, but I would say around 2.5 years. And CARVANA is in the triple digits here. And I've always seen a lot of bad talk about this company and its CEO and what the directors are doing, and just anyone in the C-suite, right? The board members, right, are potentially running a Ponzi scheme or some sort of scheme here that will eventually make the company go bankrupt, or at the very least be probed by federal authorities, right? At least by maybe the SEC, who knows, right? But again, I'm not going to focus on that. I'm just going to focus on the price action, and the price action is telling me that we should be short here. Why? Well, first of all, as clear as day, we can see a nice ascending channel chart pattern, which is inherently a bearish chart pattern. Now, here's the thing. You guys might be thinking that, hey, Andrew, are you just basing off of last week's candlestick and that's the reason why you're thinking that we should go short? No, because again, you might think just because of the fact that the markets went down, this one went down as well. However, if you go down to the daily time frame here, CARVANA was already in a downtrend for all of last week. In fact, that downtrend began 2 Fridays ago on October 3rd, right? And on Monday of last week, we continued that downtrend by making a lower low compared to this Friday's low. And we decided to break below the daily 10 and the daily 21 SMAs on Monday. And this was Monday alone. And eventually comes Wednesday when we decide to break below the critical daily 50 SMA here, this dark blue line, and we weren't able to recover and reclaim this daily 50 SMA on Friday. And eventually, obviously, the markets came to play and eventually allowed shorts to eventually double down on this move lower, and they're able to finally break below this ascending support trend line that makes up the overall ascending channel chart pattern. So what happens next? Well, based on how the overall markets are doing, I think there is a high probable chance that we can see at least a bounce and a pivot back up higher to retest this ascending support trend line and turn it into a new area of ascending resistance, right? And once we do see a retest, we can see a nice rejection, allowing more shorts and more confident shorts to come back in and smack the price lower and continue this move down. Now, obviously, when we're looking at whole number levels, okay, I want to see at least some sort of some resistance around this 340 level, and this is also a very major level of support during the formation of this ascending channel chart pattern. So during the time when the price was basically conforming to the parameters set up by this ascending channel, this 340 level was a very significant level of support back in July and for all of August. So if you do decide to retest this level and not even get too close to this ascending support trend line and it decides to reject here, then we can get a nice entry point by at the rejection at this 340 whole number resistance level. Okay, so on the weekly time frame now, if you go back here, all right, there to look at, especially when it comes to my SMAs. So if this downtrend continues, we could potentially see a retest of this currently ascending weekly 50 SMA. So that should be around 280. And so far, if you decide to continue to move lower, if the price continues to move lower and decides to break below last week's low sitting at 327.52, there's a good chance that this weekly 50 SMA continues to curl up higher, but eventually decides to flat out. So around 380 to 385 will be our ideal, or at least realistic, more realistic profit targets on any short that you decide to get in for this ticker. Okay, and again, if you don't want to take this idea, that's fine, because you guys are maybe more biased to the long side. That's completely fine as well. But make sure you guys are watching the price action and the technicals, because something is brewing here. All right, but ideally, if you do decide to come back down to around 280 to 285, then we can see a potential max profit target of 260, and that's exactly where I would want the price to pivot as well, because I will be right below 50 SMA, and I'm pretty sure a lot of bulls will try to defend at least 260 and immediately seeing a potential pivot or inflection point at this 260 level. So again, I'm looking to short this one, and make sure you guys take a look at the list as well, because I've give you guys a specific option contract, a put option contract that looks very, very enticing to grab this week once we do see that potential retest. So please read the entire report and the specific trade idea in this week's list for CARVANA. Alright, so that is it for this video. If this technical analysis video was very insightful and most importantly applicable, make sure you smash that like button down below. But if you're new here and you aren't subscribed to the channel, make sure you guys hit that subscribe button as well. But if you're watching this video when it just became public and you would like to watch this video when it's exclusively sent with this week's CFO Swinger Watch Report, you simply just need to become a reader of the CFO Swinger Watch Report. Plus, you'll become an automatic private member of the private CFO Discord community, where you can expedite your learn and earn trading system. Okay, good luck, and I'll see you all tomorrow morning.